Hey everyone, it's Rob Folia with Folia Properties at Keller Williams Realty here in Nashville and author of Real Estate Reset. And I'm coming to you today because I've had a lot of questions recently about real estate investing. A lot of people who are just kind of curious about how the market and real estate investing and interest rates, how it all goes hand in hand. Does it still make sense to invest in real estate? What are the opportunities, et cetera? And so I want to dive right in, just kind of look at an example property. I have done a little bit of the work on this one, but I figured we'd walk through this live in about 10 minutes. We'll give or take a few minutes and just see how things go and be able to explore this property a little bit and go from there. So what I've got pulled up here is a listing in East Nashville. 1203 Klein Avenue being advertised as a duplex, two bed, one bath units. Shout out to Residential Investment Advisors. It's their listing on Real Tracks here, but I figured it'd be worth it for us to analyze the information and go from there. Reason I pulled this one up right off the bat is it's still an affordable price point for a fair amount of investors out there. I know buying an investment property, you're going to need 20 to 25% down. Um, you might be thinking, gosh, 80 grand, 100 grand for a down payment. That's a lot. I get it. At the same time, it's more affordable than a seven-figure multifamily property. At the same time, it is a multifamily property, pure true investment, bought to cash flow. So let's just take a look at it and see what it looks like. Off the cuff, you can see it's looks a little run down. Just taking a look at it, you can see the roof is what it is, but it does look like it's an all brick unit, all brick home. It's a duplex, two small units. Um, nothing extravagant inside, but it looks to be in decent shape. I mean, it's definitely what I would call rent ready as it sits, at least according to the pictures. And they've got it listed here at $1,200 per side, so $2,400, really 2398. But I like whole round numbers, so we're gonna say $2,400 per month is what they are getting a month in terms of rent. So let's take a look. First off, is it going to make sense from a rental standpoint? Is it going to cash flow? Let's just take a look as it sits right now. Not talking about getting a price, getting anything off the number or anything like that. Just as it's advertised, does it make sense? Luckily, I've got a mortgage calculator pulled up. This is just mortgagecalculator.org. Of course, they have ads on here, so be careful what you click on. But I've got everything pulled up. 434, down payment of 25%, so you can see the loan amount. I plugged in an interest rate of 8%. I am doing this off of Freddie Mac, saying that it's about 7% for an interest rate right now. Um, could it be? Usually it's about 1% higher to buy an investment property. Give or take, say we'll call it 8% right now. Obviously, I can't quote you anything like that, but just wanted to share that with you. A couple other things to think about before we even talk about anything else with numbers is you've got a 30-year fixed. I just have a start date in here. That doesn't matter for our calculations all that much. Yearly property taxes, I plugged it in from Real Tracks. Homeowners insurance, I just put about 1,600. It's probably going to be a little bit higher than that. A lot of people don't realize when you have a two-unit building, it's going to cost a little bit more for insurance as opposed to, say, a regular old single-family home. Um, but yeah, anyway, we're looking at just when we calculate the numbers here, we're looking at about a 2776 payment, which is I'm going to round that up for easy math here and call it $2,800 a month. So you can see right off the bat, it doesn't make sense. Now, does that mean this property doesn't make sense at all? I mean, gosh, it's so hard to say without walking through it and seeing what needs to be done to see if we could get the rents up. And that's really where I wanted just to calculate here. I use a website every now and then called rentometer.com or rentometer.com, however you say it. If you are serious about becoming a real estate investor, it could be a good website for you to use. I actually don't have a membership to it. I don't look at it enough. My wife and I are not actively purchasing right now, and I have access to a lot of other tools, whether it be Real Tracks or whatever the case might be, to kind of help forecast rents a little bit. But Rentometer, for what it's worth, says the average rent in the area is 1941 a month. Let's round down. Let's just use the median actually. Let's just call it 1900 a month. That would be 3800 a side, or 3800 total, excuse me. 1900 a side, 3800 total. At that point, you're profiting $1,100. Then it starts to make sense a little bit, or excuse me, if we're rounding that up, you're profiting $1,000 a month. Still, you're making money every single month. Plus, somebody's paying off your mortgage. At that point, it might start to make sense from a two unit standpoint. Ideally, I'd like to see that number be a little bit higher, but just wanted to throw that out there. A couple of things to keep in mind. If you have a property manager, they're going to be taking 10% off the top, or roughly. I mean, there's no fixed number, but I've just found talking with a lot of property managers that roughly 8 to 10% is about what to expect in terms of what they're going to charge you for a property management fee. Um, I like easy numbers. So again, if it's 3,800 that you're getting a month, subtract 380 for that. Just call it 3,400 or 3,420 that that you're actually bringing in. Then all of a sudden it's like, all right, well, 3,420 minus 2,800, you're only making then at that point $650 a month. Does it make sense? Again, only you can decide. Every person's going to be a little bit different in terms of what they want to see from a cash flow standpoint. But this is the start of analyzing a rental property. So you can see we found one that at least on the surface might work. We start looking and see what it's going to cost us every month from a from a mortgage standpoint. Building in the property management fee once we have an idea of what rent might look like. And we just look and see, does it make sense from a cash flow standpoint? If I were in the market for a property in East Nashville, a duplex in East Nashville, I'd probably check this one out just to see, hey, does it, is there room to get the rents up to that $3,800 a month total? Because as you can see, as it sits, it's going to lose money. And I wouldn't want it as it sits. I'd obviously want to find out more information. They're on year leases. Are these year leases almost up? Are the tenants moving out? Et cetera. Because if the year leases just started, they're going through the end of 2025. I don't want anything to do with that because they're in there, 1,200 a month per side, 2,400 total. I'm losing $400 a month off the top, plus of course property management fees. It doesn't make sense. But if those tenants are going to be out in the next month or two, and I can look at it and say, all right, well, at that point, I can renovate. I can put $10,000, $15,000 in per unit, get it up to $3,800 for the entire place to be rented out. If it makes sense, of course, then all of a sudden I can look at it and say, all right, I can see where this one is going. An old general rule of thumb used to be the old 1% rule. And I might do another video on this soon about the 1% rule because I still think it makes sense from a rent standpoint, if you can find it, of course. That the reality is, if you can get a rental property where the rental amount equals 1% of the purchase price. So, for instance, just say you're buying it for 434, since that's it's listed at. 1% would be $4,340 a month. If you're getting that in rent every single month, you can see it, 4,340. If everything else is equal and you're getting 3,800, gosh, excuse me, I'm trying to do the math as on the go at 4,340. So not 3,800. I don't want that. I want the mortgage calculator number. 2,800. We're gonna call it. So at 4,340, you subtract 2,800. I'm getting at that point 1,500 a month. Then it's starting to make sense. Per unit, I'm getting 750. That's a good return. I can look at it and say per unit, I'm gonna pull in, what is that, about 9 grand a year, 8 or 9 grand per year. Um, Call it, 18,000 roughly for the entire property per year. I know a lot of things are going to be covered at that point, whether it be HVAC or needing a roof or tenant cleanup after move out. I'm going to have those things covered. Hopefully, the tenants are going to be in there for a while, et cetera. Like it's going to make sense from a rental standpoint at that price. As you can see, they're asking $4,300 or $434,000 for something that's going to bring in 2,400. That's nowhere near the 1%. And so, I guess my point being, and I'll probably cut the video off here, but my point being that when you're analyzing a property, aside from the numbers that we looked at, you got to look and see, is there potential? Is there upside potential in it? You've got to make sure when you're getting something with potential that you're getting a deal on it too. If I would forecast this at at 5,000 a month and they're asking 434, I'd love to take that and I'll take a loss for a few months, get it up to 5 grand a month and hit that 1%. But it's not or what I'm saying, get it up to 4,300 a month and get it up to 1%. But the reality is this market, it's getting harder and harder and harder to find those deals. These are the types of duplexes that we're seeing out there. Same for single family. It's not abnormal to see a single family home where they're asking 400,000 for it, and you're expecting to get rent somewhere around 2 grand, 2,500. That's just not a home run. And you got to ask yourself, does it make sense from a cash flow standpoint to roll with that? And only you can decide. So wanted to throw all this out there for you. I know I just kind of rambled on a lot of information, but if you have questions about real estate investing, if you want to find out more about it, just reach out to me. I love talking investing. I love helping others grow their wealth through real estate. It's been a life changer for me in terms of real estate investing. I aim to continue to invest in real estate because the reality is it's helping me grow my wealth, and it's a great place in my opinion to put your money. And so, if you have any questions, reach out. You can comment if you're seeing this on social media. If you're seeing this in your email, hit the reply button. Thank y'all so much for checking this out. And until next time, I'll see y'all later.